All right. Well, good afternoon, everyone. Welcome back to For Closing Sake. Happy Thursday. I am so excited. Listen, I am super excited. I think that you all probably feel the same way that I feel, in that, we're kind of coming off the things were a little bit not necessarily slow, but not as hectic as they had been towards the end of last year. You kind of got a chance to catch your breath, but now it is picking back up. It is totally picking back up. We're back to our normal pace. We're back. We're back to just really being super, super, super busy. And so I hope that you guys are not losing pace with your goals for this year, not losing pace with your calendar. And again, just really putting systems in place to have just some predictability and organization in your day, in your business, right? And throughout your year. So I hope that you guys are feeling that momentum, you know what I mean, that shift as we're pushing forward. We're now at the end of February, just about. Next week will be our last day of February. So we would have already completed 2 months out of this 12-month cycle that we get of 2022. So I hope that you guys are excited. I hope that you're excited about what you've accomplished. And I hope that if you just have so much more to accomplish, that you're finding a path forward, right? That's what it's all about. We're always a work in progress. We're always looking to improve and grow. And so I am so happy to see you guys, and we come together each week for closing sake, right? We're all in the real estate industry. And that's, as we always say, listen, we don't get paid until we close. And so we're always having that conversation about closing and getting to the closing table. Listen, we come together. If you've never met with us on our weekly, we call them business meetings at this point. The purpose is just to provide a weekly business development coaching call for realtors and those of us who are in the real estate profession, to discuss the latest trends and need to know information to grow your business, right? I was talking to one of my coordinators, and I said, this is like a virtual BNI. If you've never participated in a BNI before, a business networking meeting, they're usually kind of super early in the morning, and it's really just for the purposes of different professionals to come together to share their experiences and grow their business. That's all it's about. And so I see this as a virtual BNI for realtors, and that's really what we aspire to. For those who I have not had an opportunity to meet before, welcome to the For Closing Sake table. I hope that you brought lunch. This is our opportunity to just grab lunch and have a little conversation over bite-sized business development tools over lunch. And my name is Racole Jackson. A little bit about myself. I am originally from Florida. I attended the University of Florida, Go Gators. I got my law degree from Santa Clara in California. Came back home to Miami and got my LLM in real property development from University of Miami School of Law. That's just essentially a specialization for attorneys. I am a licensed real estate sales professional in Florida, was first licensed in Florida. My passion really is just to strategize with real estate professionals to help grow their business. One of my business lines is Title Xperts. I was first licensed, like I mentioned, as a realtor in California. Then I got my real estate license in Florida. Yeah. And then I got my law license. I'm thinking of a timeline in my head. I got my license to practice in Florida after I got my real estate license after law school. And so after launching the firm, we then launched Title Xperts, which is our title insurance and settlement firm. Prior to that, we did launch our brokerage, but this is our baby right now. For those of you who we have not had an opportunity to work with, Title Xperts is a full service real estate settlement and title insurance firm. We service all of Florida. Benefits of working with Title Xperts: we are an attorney managed firm. We do provide a dedicated closing team. We do provide regular status updates, helpful closing guides, and rush processing is available, especially now with you having to make an offer saying that you'll close tomorrow, right? I don't know if that's possible, but you can tell them and we'll do our best to help you get you to that deadline. If you had not had an opportunity to meet some of the closing team before, this is some of the illustrious closing team. You see my partner there, and some of the closing coordinators in the office. If you do receive a contract or an offer while we're on the call, we love to work with you. Our new contracts, go to contracts@titlexperts.com. General questions you might have about closings and our closing process, go to closings@titlexperts.com, and our lovely vanity number 8665 experts with an X. We love to chat with you. So after that brief commercial break, this month our theme is the essentials of real estate business structure. The essentials of real estate business structure. And what we're looking at is, you know, again, I always say that when you got your license, congratulations, you are now running a business. You are now the CEO of your very own real estate business. And no one is having that conversation. No one is having that conversations with realtors to tell them, hey, listen, literally, congratulations, you have stepped into a opportunity to really chart the course for yourself professionally and financially. You are the end all be all for your business. You get to make the decisions on how much money this company will make, will not make, when the doors are open, when they're closed, who you will serve, who you will not serve. You are officially a CEO. But no one tells you how to do that, right? No one tells you what that looks like. And I mentioned at last week's meeting that as a senior attorney at a law firm, I was stellar at providing the service. I was even stellar at managing other attorneys, but I wasn't responsible for managing that law firm. And so when I opened my own firm, it was like, oh, guess what? Here are the things that were going on that you did not know about. And so that was many moons ago, many companies ago, that was my first experience. And we've since now perfected that. And so the conversation is, hey, CEO, be sure to consider these things, these essentials, as you operate your business. And so we talked about incorporation. We talked about business banking and credit last week. This week, we're talking about some of the expenses and even tax preparation, right? It's never too early. This is tax season, essentially. We're in January and the deadline to file taxes will be in a couple months or so. But it's never too late or never too early to have this conversation, because this is part of your day-to-day operations. That's what you have to understand as a CEO. Business expenses and tax planning are part of your day-to-day operations. You do this every day. Every time there's an income or outflow expense from your business, that's something that needs to be tracked in preparation for filing taxes, right? And so understand, again, reminder that you're operating a business. You're operating a business. Even though it's for most professionals, most real estate professionals, even though it's singularly you are an employee, if you've already set this entity up, an employee of your business. And so we're going to function and present our service offering to the general public as a business would. And we're going to also operate our service offering as a business would. Now, in having this conversation concerning business expenses and tax planning, the first thing to say is I am not a tax attorney. I have no desire to be a tax attorney whatsoever. Nod City. No, I'm just kidding. I do not. Oh God. Even when my CPA calls me, I'm like, oh, what? Like, we have this set up. What do you want from me? It's just what it is. So I'm not a tax attorney. And one of the first things that you will do is you need to look into hiring a CPA. We are going to bring to our one of the business meetings coming up a CPA that I worked with at by a prior business training workshop to have a conversation with you guys about what to look for in a CPA, as well as the services that you should expect from a CPA. But with that being said, even if prior to her coming on, you need to make a note that you need to look into hiring a CPA. Got to do it. And it should not be, it's not going to be ridiculously expensive. Expensive. The cost of hiring a CPA obviously is going to be relevant to relative to the amount of transactions that you have, right? If you're running a business with a lot of inflow and outflow each month, each day, then yeah, it's going to be more time for that CPA. But if you're running a fairly streamlined business, 6-10 closings per month, right? That's nothing too big, right? 6-10 commission checks coming in per month and the standard expenses going out. That's not going to be anything that's ridiculously expensive for your CPA. Generally, what your CPA is going to do each month is they're just going to do your reconciliations, right? Reconciliations mean they're going to look through all the income and expenses that have gone out of your account, make sure that they're appropriately allocated, ask you any questions that they may have about some expenses that have come in or come out. They can also have a conversation with you about financial forecasting, saying, hey, your revenue was a little down this month. They'll send you my CPA, they'll send a report. This is what your revenue was, the difference between this month and last month, as well as this month, this year, or year over year. Here's where you were last year this time. Here's where you are this year this time. Does that make sense? That's something that's kind of helpful for you, right? I think that's something that's pretty helpful, is showing you the growth of your business, and it allows you to also see trends. There can be trends in the real estate market. There can also be trends in your business. There may be a trend in your business because you decide that in December, you just absolutely take that entire month off. And that's fine. You can do that. And so obviously, if you take that entire month off, then the trend in your business is likely not to be many transactions closing probably in January, February, because what? Because we know in our business, you're running in about a 30, 60-day cycle. You put something under contract today, it's going to close in what? 30, 45 days, 60 days at most if you have any issues. Does that make sense? So we have to, when you think that way, you understand, what your expenses should look like and what your income and outflow should look like in your business, right? Now, when we talk about business expenses and tax planning, we mentioned last week that incorporation allows you to create, remember we talked about incorporation the first week, it allows you to create a clear demarcation, a clear separation between you and your business. A clear demarcation between you and your business. And so today we're talking about business expenses. Now, obviously the expenses of your business naturally affect you, but we have to think about expenses as it relates to our business, keeping them out of our personal expense column, because our personal expenses are not write-offs. They're not, potentially, or they don't have the same weight. And so when we operate, when we get into the habit, when we put the system in place of having our banking business account with our business expenses going through our business income going into that business account, now you're lowering your tax burden. I know you guys have heard this before, that one of the major benefits of running a business is it lowers your tax burden. It lowers your tax burden. The government, the tax code is set up to encourage and benefit businesses. I mentioned to you guys before, I have a book. Where is it? I'm looking on my bookshelf. Oh. Tax-Free Wealth. Order this book, because listen, I don't know everything. And I want to make sure that I'm familiar with some other ways that I can lower my tax burden. This is in the code, you guys. It is literally written in the tax code. Here, it says it right there. You only want to pay what you are legally obligated to pay. It's called Tax-Free Wealth. How to build massive wealth by permanently lowering your taxes. And it's by Tom Willwright CPA. And this is from the Rich Dad Poor Dad brand. So I came across it while reading some of the other Rich Dad Poor Dad books, right? And obviously it's written by a CPA, right? So the whole goal of the conversation today is to make sure that we are set up so that you're only paying what you are legally obligated to pay. Hey, Monica, you only want to pay what you're legally obligated to pay. So one of the first things I want to tell you is that you only need to set up what I'm calling basic accounting. Again, I have a CPA. I have accounting mechanisms set up in this office, but I am not the accountant. I'm not, and I'm not trying to be. I am absolutely not trying to be. I know how to read my books. I know what comes into my books. I know what goes out, but I'm not filing the taxes. I'm just not. I'm not reconciling the account. I'm just not. I see what comes in, but my accountant is going to go in and allocate the expenses for marketing to marketing, right? The expenses for payroll to payroll, the expenses for rent and depreciation to those different charts of accounts. So for you guys as real estate professionals, again, right now, most of your businesses are very simple. So all you need is basic accounting put in place. And what does basic accounting mean? It just allows you to stay organized, to avoid audits, and simplify the tax filing at the end of the year. You guys might have remembered last week, it was mentioned in the chat that the one of your colleagues had not separated her expenses yet. She was just running them all through her personal bank account, and now dealing with the CPA, it's like, which of these are for business and which of these are personal? And she said it's a mess with 10 S's. It is a mess. So setting up a separate bank account to separate the income and expenses of your business will simplify your tax filing at the end of the year, and you will also avoid audits. What do I want to say about audits? If you do not set up a business account and you go to make these write-offs from your personal expenses, I forget what the form is, schedule C, I want to say. Oh, Naris, tell me what it is. You will, the IRS, you're 10 times as likely to be audited. So if you're trying to take your business write-offs from your personal, on your personal taxes, you are 10 times as likely to be audited. They can be they very well can be bona fide business expenses. But because you haven't made it clear by setting up a business entity and setting up a business account that this is a business that I'm running, Mr. IRS, now we need to have a conversation about it and explain it to me again. Let me just make sure, right? So keeping them separate will allow you to stay organized, not having to sift through all of your bank statements and highlight what was personal, what was business. And it will also have you avoid audit because you're not deducting these expenses from your personal income on your personal income taxes. So the first thing you need to do, if you have not done anything else, is you just want to keep your expenses separate. Keep them separate. Do not run them from your personal banking account. Do not run expenses from your personal banking account because, again, when it's time to write them off, it's going to be a hard time to have that conversation. I will tell you, before you've even set up, you'll see here, these are some bookkeeping software that you can use. FreshBooks, it's a what I call it, it's like accounting light, I like to call it. It's a software that realtors can use. You also have QuickBooks, and they now have QuickBooks for realtors. I use the full QuickBooks version because I don't use any light version of it. I need the full QuickBooks version. But the point is, once you get with a CPA, and you can even try and set this up now if you're savvy enough, they're going to suggest to you an accounting system that is going to track your expenses and your income. Because these accounting systems also have what they call chart of accounts. And chart of accounts is where you will categorize all your expenses. Some of your expenses have 100% write-off, some have a lesser write-off. But you also want to know, it'll allow you with, once you start using these systems, it'll allow you to prepare what we know as what a profit and loss statement. And so you'll see I'm going to use simple numbers. I made $100,000, but I spent $30,000 on marketing. Is that a good number? Is that what you intended to, was that your budget for the year, to spend $30,000 in marketing? Right? Was it your intention for the year to spend $10,000 on business meals? Right? So keeping them separate and then using one of these systems that has a chart of accounts that's going to categorize your expenses allows you to really see where your money is going. We want to know where our money is going, right? Now, one thing I'll tell you before, and I think I mentioned this to you before you even implement one of these systems or softwares, if you don't have it, just having the separate bank account alone will be a help for your CPA, because what they'll do is they'll go into your bank account and they'll just download as an Excel or CRV or CVR or something like that, a spreadsheet. And then they'll be able to separate out all of your expenses. So your bank account itself, your bank statements alone, until you put one of these systems in place, will be enough for you to have your personal versus your business expenses and income separate from each other. So don't say, oh, well, I don't know about QuickBooks yet. I don't know about FreshBooks or Mint or all these. Before you even get there, just keep a separate bank account. If you keep a separate bank account, guys, alone for 12 months, that will be better than trying to separate out your income and your expenses from your personal account at the end of the year. Just keeping a separate bank account alone, your CPA will love you, hug you, and say, thank you, God. And it'll be cheaper for you, because the amount of time they put into to clearing out your income and expenses is going to increase your costs. All right. So let's get into what are some of the expenses that you can write off. I mean, this is just a short, a short example, because before we start talking about them, there's Gerlene. Say, please get a separate bank account. Just start there, right, Gigi? I'm going to tell you, anything related to your business, when you get a separate bank account, there she goes, yes, with 3 S's. When you get a separate bank account, just utilize that bank account for everything related to your expense, to your business. And let your CPA at the end of the year tell you whether it's 100% write-off, 75, 50%, 25%, or none at all. That's fine. Most of your expenses will be a business write-off. But you let them tell you that. You throw it all in that bucket and you let them sort that out. Right? So let's run over some of these, because sometimes something could be so clear as right in our face and we're like, I didn't even think about that. Like, I didn't even think about that. Also, you obviously don't want to spend money that you don't have, but I would think that you're more likely to eat the expense or take the expense if you realize at the end of the year, you're going to be able to write it off anyway. Because here's the deal, the IRS wants to encourage you to stay in business, to grow your business. These are things that are necessary to grow your business. If they were not write-offs, then, I mean, why am I doing this, right? Let someone else pay the cost of this. So Renee says, sometimes writing off everything will lower your income, will not help when you need to use your tax for. Correct. So again, with the comment Renee just made, if you're writing everything off of your, let's say, for example, you have not set up a business with a business account and you're not paying yourself a salary. If you're paying yourself a salary, there's no reason for you to be deducting business expenses. Hello. If you're paying yourself a salary, if you set up this business and you're paying yourself a salary, and this is why people write off so much on their personal income, because they don't have a business set up to write these expenses off. So they have to write them off their personal income. Once you set your business up, guess what? There's different types of income sources. You have distributions, right? It doesn't even have to be a salary. Let's say, for example, your company made $100,000. And again, this is just an example. I am not a tax attorney, see your CPA, but this is standard. Your company made $100,000. Just use it for example. It pays you as a salary, a fair salary, a fair wage, $50,000. Now you're going to be taxed at whatever that tax rate, whatever your tax rate is based upon your circumstance, your personal circumstances, on that $50,000, right? As the owner of that business, you can also get distributions, which have a completely different tax rate. As the owner of that business, you've also obviously decided that you are taking on, and this is on the next slide, the cost of the insurance for the CEO, the health insurance for the CEO, the life insurance for the CEO, 401k investments for the CEO, self-employment IRA for the CEO, traditional IRA for the CEO. You're the CEO. You've decided that these are some in-kind compensation to Renee. So let's say, for example, so now let's say that the cost of all of those contributions, I think our max right now is I think is it 16,000 a year? 16 or 12. So you have 50 plus the 16 for the contribution. Health insurance, let's say health insurance for the year is 6,000. So 50, 16, 6, now we're at 26, right? That's 76. What else? Let's say uniforms. You don't have to pay for clothes because you use branded attire. What's the cost of that? So now your in-kind compensation to the CEO, let's say it's actually 80 grand. But your salary is 50. You're paying taxes personally on 50. But all these other business expenses that benefit you are not written off. They're business expenses. Let's run this. Remember, what did we say last week? It's not about how much you make, it's about how much you keep. So we're going to posture ourselves to pay what we are in taxes, what we are legally obligated to pay. Listen, I'm an attorney and I'm very conservative. I don't toe the line. If we need to pay it, we pay it. It'll be okay. I'm not willing to have a conversation with the IRS. Right? So this is just some expenses. Now, one thing I point out with regards to vehicle, before we move to the next slide, is there are two different ways to make those tax write-off. They call it a simple and a modified, and that is in a simple, you just your CPA will say, well, how many miles did you drive this year for your business? And you say, okay, I drove 12,000 miles, and it will 12,000 times. I think the rate right now is 59 cents per mile. So it'll be 59 cents times 12,000. That'll be your write-off for the year, versus an itemized deduction where you literally itemize the expenses for the vehicle. And that's a conversation that you have with your CPA about how to do that. But guys, look at all these other things, the MLS dues, your NAR dues, your association dues. I hope if anyone has been in a business 1 year already, you see, I know you guys have all these expenses. Did you write all these expenses off? Now, I know Gigi's trying to, because that's why she's saying it's a mess. Now she's trying to go back and recapture all of the expenses that she's had over the year for her business. So if nothing else, just organizing yourself this way, she said, I'm a mess too. Just organizing yourself will save you money, right? Yeah. Yeah, we definitely have to start. We have to start with the end in mind. And then you guys will be happy to see that the CPA that you hire will be a tax write-off. That's a professional service, right? The staff, the virtual assistant that you pay, make sure y'all keep all your make sure that you get their EIN, guys, so that you can send them a 1099 at the end of the year for the payments that you make to them. CEOs, right? Chris said, me too. And then the software that you're going to use, QuickBooks, that's a business expense. That's a business expense. And we talked about this one already. One thing I want to, banking fees, once you have the bank account, if it costs you like maybe 10 or 15 bucks a month, that's an expense. That's a business expense. Business travel, business expense. Listen, guys, if you go to Hawaii to do business, all of my international brokerage realtors, if you go to Hawaii to see your team, hello, business expense. Just make sure you document, you make sure you're doing business. I'm not telling you to go over there and not do business. Make sure you're going over there to do business, but that's a business expense. And then the last thing I'll say is your home office. That is a write-off, but it's very strict. So you need to, like, for example, if your computer is in your living room, you should only be writing off the square footage the space that you're actually using. So you want to be careful with that, but we will be remiss if we did not put that on the list, because it is a write-off. It is a possible write-off, right? All right, so again, our takeaways are that when you step into this space, there are benefits. There are benefits to your business. And we want to ensure that you take advantage of all of your benefits of your business. I see that there was a question about setting up a PA versus the LLC. All the recordings, guys, of these the conversations that we've had are on our YouTube page. We'll drop the link in the chat, as well as if you just go to YouTube and search for Closing Sake, you'll see the videos come up. There's the link in the chat, right? So you want to go back and listen to those videos. We do go over registering for a, there you go, a PA, right? The PA versus the LLC. In closing, our closing quote. And don't forget to like and subscribe to the channel. Exactly. If you like and subscribe to the channel, you obviously get the notifications as soon as the videos are uploaded. In closing, if you want to be wealth, be wealth. Talk it, think it, prepare yourself to have it. Yes. If you want to be wealth, be wealth. Talk it, think it, prepare yourself to have it. I gotta say that one more time. If you want to be wealth, be wealth. Talk it, think it, prepare yourself to have it. Guys, you know, you've seen this, that most millionaires, billionaires, now we're coming up on trillionaires, they've been made through what? We got technology now, but traditionally, what is it? Real estate. You guys are operating in the space of wealth. You're operating in the space of where wealth is made. Remember, it's not about how much you make, it's about how much you keep. Wealth and financial freedom is about having more income than you need for your expenses. And you too can be wealth. You can be wealthy, but you need to talk it. We have to have these conversations. We have to think it. Think about it as we operate our business. Am I operating in wealth? Am I operating in wealth? Am I running my personal card for a business expense that I will be able to, at the end of the year, get a tax write-off for? And am I preparing myself to have wealth? Preparation is setting up my business entity, setting up my business account, putting my CPA in place. The wealthy people do not run their own books. I'm just telling you. So if you want to be wealth, be wealth. Talk it, think it, prepare yourself to have it. Love you all. Love this conversation. If you found value in this conversation and you would love to share this with your colleagues, invite them to foreclosingsake.com to sign up for next week's business meeting.